Seems like a technological failure. Hey, imagine that. Anyway, let me finish up real quick with respect to what I was saying with the U.S. Flip my screen again so you can see what's going on. You can see in 2022, when the world was in a risk-off deflationary cycle, the dollar went straight up. And so here we are in a situation that was very different, that the dollar actually dropped really hard yesterday on Friday the 2nd. Now, that's interesting. Now, again, the volatility metric and the overbought, oversold condition suggests that this doesn't last, that we see the dollar move up again. But the U.S. dollar movement is going to give us a big indication as to whether or not we're headed higher in currencies and whether or not we are headed lower in terms of U.S. equities because of a deflationary risk-off cycle. So we'll see. If it can stay below this trend level for more than 3 days, it will tell me chances are something is very, very different with regards to this particular cycle compared to others. And that's true across the board. Cycles are always different. Bitcoin, real quickly, you can see that it is in a scenario where it is the typical squirrel, kind of all over the place. But I want to zoom out and look at this on a weekly scale. This is Bitcoin weekly. This is its trade level, which is price volume volatility for a longer time series than less than a month. This would be basically around a year's time frame. But it's a good level of support. Now, me personally, I think 56.5 is probably a good number to be able to add additional Bitcoin to your repertoire if you're interested. I do believe in the Bitcoin technology and the network as it continues to grow, and we'll see how that goes. I do believe that there are a number of alternative type cryptos that probably are going to work well, including the Ethereum network and the Solana network and the Chainlink network. Solana, I believe, is probably one of those golden childs of this particular bull market, even though right now it's not necessarily acting like it, and we'll see how that goes. Gold, as I mentioned in the beginning of this video, we saw it sell off on Friday, but it recovered. And you can see that at one point it was down about 1% to a low of 24.10 per ounce, and then it hit this shaded area. And this shaded area is what is our trend level on a larger, longer-term scale. And so you can see this line here, 2370 on gold is an area that if it hit it, based on the macro regime, I would want to be an owner. I would want to be a buyer. But the just continues to tell me that it is a larger probability that the reason we saw markets, both the S&P 500 and the NASDAQ and the Dow and the Russell 2000 sell-off was because of this scare of the Japanese yen carry trade starting to unwind. And we just don't know where that goes. So our major algorithmic programs stayed fairly exposed. Our main program, which includes a number of different asset classes, stocks, bonds, commodities, credit, short-term treasuries, things of that nature, it stayed fairly exposed at roughly 69% equity exposure for domestic and then an additional 3% for international. And that was a cut from the day before. However, not as big of a cut as we would expect if the algorithms were seeing massive flows deteriorate. So we didn't see that yet. In addition to that, we have two other trend models that are highly sensitive to when markets completely shift its trend. And those models will actually short the market. Neither of those two models shorted the market yesterday on Friday the 2nd after markets dropped towards the put wall of 5,300. That was encouraging for those of us who are trend followers and want to take advantage of that trend. Our friend, and when the trend is no longer our friend because it breaks, we get out of Dodge. And when that happens, those two other modeling systems tend to go short the market, and neither of those did. So we'll see. Could it happen that they short the market here sometime this next week? Yeah, it is highly possible that that could happen, and we just have to pay attention, and will, on a day-by-day basis, and continue to move through the cycle and find ourselves in a situation where maybe we're back to a 2022 scenario. Markets don't tend to top and roll over in July or August. So there's that. They don't tend to completely fall apart in the midst of an election year, albeit, truthfully, this is a very weird election year. A lot of noise and a lot of hyperbole and frankly a lot of negativity coming from everywhere with respect to this particular election cycle. But election years in general tend to not be a market cycle top. So there's that, right? So we're just going to continue to pay attention to the math of it all, the rate of change of price, volume, and volatility on various timescales, and more importantly, what the algorithmic structures are doing, telling us whether or not institutional flows have deteriorated or have caught up. We'll see. So far, like I said, just to close, I think we see a bounce here in equity space in the next couple of days. And if it fails at those trend levels that I showed you, well, then we'll make a new choice and something different is happening. And if there's one thing that's true about markets is they're dynamic. They're always a little bit different. And this is why we believe we have to have these very powerful computing scenarios helping us to read what's happening in institutional flow space. So with that, if you have any questions or if you'd like to find time to chat on the phone or meet, I am always open for that. So I would certainly encourage you to reach out to me. I am the world's worst mind reader. I've been told that a number of times too. So, and those that love me the most know I'm a terrible mind reader. So if you do want to chat, I would just encourage you, please let me know. Reach out to me, Chris at careformywealth.com. My direct line is 608-354-1977. I would always encourage a phone call. And just let me know what's on your mind. Let me know how I can help you make sense of perhaps what's going on in this cycle. And again, we'll continue to pay attention moment by moment, day by day, and work ourselves through this. And we'll all get through whatever volatility the market is throwing without any issues, I believe. And I'm invested right there with you. Literally, I am doing the exact same thing as we manage these portfolios and as we continue to be blessed to work for you. And I thank you for that. And with that, have an amazing, wonderful Saturday and rest of your weekend. And we'll see you next week. God bless.